much. And let me just give you the floor in terms of what you're seeing from a technical perspective and what we need to be really aware of here.
Yeah, well, let's take a step back. The S&P 500 off 4% from an all-time high. So it feels bad being in it, but really kind of within what we would consider a bull market correction. We don't think there's been significant damage to the trend. So I think we're still okay here. I think there's some cross currents at play. You know, on one hand, from a near-term basis, we do think conditions are becoming tactically attractive. We're still above support. 2,800 is what we're watching on the S&P 500. And the percentage of stocks that are oversold are really starting to spike here. So I think we are still in play for what we think is going to be this year-end rally. On a more intermediate-term basis, some of the cracks, longer-term cracks, are broadening out. If that year-end rally goes unconfirmed, I think we could be due for a larger reset in 2019.
So what specifically then are you watching for? Let's start with the S&P 500 in terms of the next technical level to watch. Obviously, 2,800 sounds to be like an important level.
That's a nice big round number that also coincided with what was a breakout for the index in the third quarter. Typically, prior resistance levels become support on the way back down. The index's rising 200-day moving average also closing in on that, actually a little bit below, around 2765. I think that 200-day moving average is a great proxy for the trend. You can see that 200-day still rising, so just from that unemotional perspective, I think the long-term uptrend is still higher.
Okay,
still intact.
It's still intact. So, but and that's on the S&P 500. We've just been showing our viewers the Dow, but the 200-day moving average on the S&P 500 is still intact. Yes. Yes.
That's right.
Okay.
You're looking at support levels. As far as what levels to watch, that's closing in on 2,800. Watch 2,800 support. I think that's a big one.
Okay. And in terms, Ari, of some of the cracks that you're actually seeing and the concern that they would actually broaden out, what specific areas are they in? I mean, we've seen a sell-off in tech for sure, consumer discretionary as well, but maybe it's a sell-off that's warranted. So are there other areas of the market that you're concerned about or more concerned about than tech and consumer discretionary?
Yeah, actually, I wouldn't lump tech and discretionary in those baskets. I mean, what's recently happened is you've had some pretty broad-based selling. A lot of the winning groups, tech, discretionary, have come in a lot. I would still say that those sectors are still above support. But this is a great example that when the macro turns, the weak get weaker too. A lot of those weak trends going into this are really starting to break down, and that's weakness I don't think you get back necessarily. And some of those areas, you know, for starters, overseas markets. Europe's in a big topping pattern, and in the U.S., some of the more higher beta areas. I know I mentioned tech, but probably the weak spot within there, the semiconductors, the material sector breaking out, some of the more globally commodity exposed groups. So those are some of the concerns in my work: high beta and overseas markets.
What does look to be stable, if we can probably use that word? Where could investors look to put new money to work in this environment, and in particular if we see more of a sell-off?
Sure. Well, I mean, for starters, tech, I think still works for the long term, specifically on the software side. So I think long-term investors, when you get these deep pullbacks, look at those software names. I think you want to buy them on the pullbacks. Very interesting to us, a lot of the bond-like equity sectors are holding up better than the actual bond market recently. We have seen this flight to safety. One of our favorite kind of more lower volatility, lower beta areas is healthcare. Some of the managed care names in particular holding up really well. They fit some of the growth themes we like too. I think that's a great place for investors to be for the coming months and maybe even coming quarters.
And Ari, you're on a trading desk in New York City. Give us a sense in terms of what the sentiment is like there. I mean, people have been in the business a long time. I've seen this many times, but is there any nuance that we need to know about?
Listen, we've had a great run in the market, and when you go a while without a pullback, when you get one, the fear of height sets in. Everyone thinks that that inflection lower from an all-time high is going to be this much anticipated, very significant decline. You see it in my incoming emails from an anecdotal sentiment perspective. This kind of 4% market pullback has caused a lot of emails to come in. So I think from a sentiment basis, it does show that there's still some longer longer-term skepticism hitting the market, which from that contrarian perspective can be viewed as a positive.
Okay, Ari, we'll leave it there. Thank you so much for joining us at the top of the show.
Thank you very much.
Thanks. That's